Kia ora koutou. Hello everyone, my name is Peter Vile and today I'm talking to Hannah McQueen, fellow chartered accountant. Today is the 3rd of April and I need to say that because with the world changing as quickly as it is, it's important that you know the date that Hannah and I had a chat. Hannah, as I said, is a fellow CA and she's a director of a company called Enable Me. Enable Me's aim is to get Kiwis financially fit and strong and by letting them get in control, reduce their debt and build wealth. Hannah is not only an FCA, she's also an author of a number of books. And one of them was called Kill Your Mortgage and Sort Your Retirement, the go-to guide for getting ahead. Lots of very sound advice, Hannah, for normal circumstances, but we're not in normal circumstances. So that's what we need to chat about. But first, can I ask you, Hannah, how's the lockdown been for you? We're only on day 9.
I know, day 9, but it feels like day 109, to be honest. I'm finding it difficult. My business, I'm fortunate that we are busier than ever, but I'm still homeschooling children, right? So I had this interview with the One News, which was live, and I had 2 naked children behind me running around, and I'm thinking, oh my gosh, why do I need to think about this? But we are around, we are alive, and while we're alive, we're still kicking, so we are positive.
I love that positive attitude, Hannah, and it's really good to hear that you managed to, I hope, keep those naked children out of shot for the TV1 News. But look, one of the things, with everything turned on its head, the advice you're giving is obviously very much based on evidence and research and principles and an approach. Are those sort of same principles and your same approach applying to the advice you're giving your clients?
Yes, and more so now, to be honest. So there are 3 categories where you start. You are either in financial survival, or you're trying to stabilize, or you're trying to maximize your own situation. So in pre-COVID, I was working with people who were trying to stabilize and maximize quite quickly. And now we are getting exposed to a lot of people who actually are in survival. And we have to get them out of survival so they can stabilize to maximize. So we've gone, I guess, in a direction that we weren't previously in because people aren't as resilient as what they need to be. But the interesting thing at the moment is that most people are misdiagnosing themselves to be in the survival state and panicking as if they have no reserves. And a lot of people are either going to be unlikely to be impacted negatively from COVID or not within the realms that they can't afford to manage. So they are panicking unnecessarily. So we're spending a lot of time re-diagnosing people and trying to get them resilient as quick as possible so they can stabilize and think more tactically around what the next 3, 6, and 12 months will be, because that's where it's going to get volatile. It's not when we're getting a wage subsidy, it's after that. So there's more of an emphasis on getting people stable faster than we've ever done before.
Completely understand that, Hannah. So one of your approaches is to ensure that people plan properly, and planning must be more critical than ever. Can you comment on that for us, Hannah?
Yes, so I guess the 3 components of why we get such great results with our clients is that we diagnose correctly, because we tend to, even outside of crisis, we tend to overstate how well we do. And certainly in crisis, you just have no idea. But we diagnose, we create a plan, and that plan is dynamic in the sense that as assumptions change, the plan needs to change with it. And then we support, because a lot of people know what they need to do. They remember what they need to do, but they don't execute on what they need to do. So that's the piece where two things are notably different, is that we're having to diagnose more people, and that misdiagnosis is concerning because everyone's gone for panic, and the plans become out of date within a 48-hour period at the moment. And so a lot of people are thinking, oh, I've got this plan, but it's redundant now. So we're fortunate that the agility of our plans, we react in a real time to these changes. But a lot of people that aren't used to planning or strategically planning, they're left high and dry. What they planned a week ago is now no longer valid, and it certainly won't be applicable in 3 months' time. So that light on your feet piece, most people can't do normally, and you certainly can't do it when you're in crisis and you're almost debilitated in your thinking because you're not thinking soundly.
So absolutely, idea of needing to be agile, to be thinking on your feet, to be changing your plan weekly, if not daily, or sometimes even hourly. How hard is it for people to do that, Hannah? It's a pretty new thing for people to have to cope with this level of change in such a short space of time.
It's overwhelming, right? But it is the new norm, so we've got to get on board. I think that as a baseline with every plan, we need to have 12 weeks of cash flow certainty. So all emphasis has got to be on how do we create that as quickly as possible so that you can then cast your mind to what's probably going to happen after that. So your plan takes into account what we know to be true, what we think is going to happen, and what also could happen. So there's layers already factored in so that as these things start to occur, you're pulling different levers or responding in a way that you anticipated because you'd thought that through, I guess, as far as it needed to be thought through.
But how are your clients, how are people thinking working out what could happen? They're presumably scoping up various scenarios and it's really hard to know, isn't it? So what's your guidance there?
Well, the first thing is that it doesn't really matter what we think is going to happen to start with. You've got to have at least 12 weeks of certainty. And if you don't, you need to be making decisions now to create that. And they could be big decisions. But what we know so far is that we've got a wage subsidy for 12 weeks. So at the very least, we can survive. We've got mortgage holidays for up to 6 months if it's appropriate for you to take it, and it's not for everyone, which we'll talk about. And we've got some government subsidised funding if you're self-employed. So there is access to lifelines that could give you certainty for up to 12 months. But what isn't discussed is whether you should be accessing those, because they all come at a cost, and whether it's more important for you to be pivoting in your business instead of trying to keep your business afloat when the new norm is going to dramatically change what you did 4 weeks ago to what you might need to do in 4 weeks' time. And that's the piece where, unless you've got the clarity of mind, you can't even think about it because you're panicking of, I don't even know how I'm going to do anything. But the cool thing about COVID, if ever there was a cool thing, is that you can't spend money at the moment. So if ever you are going to be able to budget successfully, it's now. And for people who are overwhelmed by budgeting, there are only 5 costs that you need to factor into your budget at the moment. It literally is, do you have a rent or a mortgage? What's your food? What's your electricity? And what are your insurances? And that's pretty much all you have to allow for. And everyone should be able to do that. But if you can't, or if you know that you need way more than budgeting advice, you need tactical plans, well, that's when you need to circle in to get some help.
No, that's very sensible, Hannah. I think you're right that everyone needs to think about pivoting their businesses. You touched on that, but maybe at the same time apply for the assistance that is available. Think about it carefully before you do. I think that's the point you're making, but perhaps do both at the same time. Be pivoting and being agile to change your business as you need to, but also don't miss out on assistance that is appropriate for you to obtain.
100%. And I think I would also say that when you have accessed that assistance, I had a client who's done that yesterday. So they received this mortgage holiday, which is great. So they don't have to make mortgage payments for the next 6 months, but they will have to pay for it in the future. So it's been deferred and there's a cost attached to it. But what I said to them is, okay, well, that gives us certainty for 6 months. Let's not erode that buffer. We now have to be thinking beyond 6 months. And what a lot of people are doing, Peter, and it freaks me out, is they get the certainty and then they bury their head in the sand. They don't even want to know what happens after 6 months. Whereas you and I both know that this is probably the only gesture you're going to get in your lifetime from a bank or a government. So let's not erode it. Let's really use it to get you resilient. So you've got peace of mind. Let's get you agile, because you can be agile when you're resilient. Let's stabilize, and then let's be strategic.
Yeah, you're absolutely touching on very important aspects of human nature here, Hannah, in terms of, you get this lifeline, you use it, you then go into this mode where you can't do anything. You're frozen, but you can't be frozen. You've got to be planning. You've got to be thinking ahead next week, next month, 6 months ahead when my mortgage holiday is finished. So absolutely, you've got to keep moving and make the most of, as you say, there is a silver lining. There are a few silver linings to this COVID thing. One of them is the agility with which businesses are changing the way they operate and doing some amazing stuff. but there's also this chance while your personal expenditure is, as you say, you can't really spend money other than those core mortgage and rent and insurance and food. That's all we're allowed to buy at the moment. So and the pharmacy. So absolutely. So you're bringing out, I think, a really important connection between business finance and personal finance. And so a lot of business owners, I think, particularly small business owners, are very focused on keeping their business going, hopefully keeping their employees on the payroll with the assistance from the wage subsidy, for example. But obviously they've got to be thinking about this holistically and thinking about their personal finances as well. Some of them will take the mortgage holiday. The mortgage holiday may not be ideal for everyone. It is a deferral, as you say. The debt doesn't go away. The principal and interest will still have to be paid. So how are people best to think about combining their personal and their business situations?
Right. Well, when you're a small business or you're self-employed, the personal and the business are almost blended. The business almost becomes like another child to you. But at this point, we need to distinguish. I think a lot of self-employed Kiwis aren't good at putting their own interests first. And we have to do that for the viability of the business. So what that means is we need to first understand, what do you need as a family to survive? And we work out what that is from a cash flow perspective. And the business needs to be able to give that to you. You survive first before you save the world. So I think that's important. And if the business can't give that to you, then there's a bigger question and a much harder question around, will it be able to give it to you in time, or is it probable it's not the right business to carry forward? But we prioritize you and your family before we worry about taking a business forward that may no longer be viable. But there's some mindset challenges within that, and it is confronting and it's uncomfortable and you're already stressing out and everyone else is hysterical. Like, I understand that, but if the one thing I would give you that I empower my clients with is, you are just as important as the business and your staff, and we get you to survive for the longevity of everything. But you need to understand, what do you need to survive? So that's doing your cash flow projections for the next 6 months. Let's work out what the business has, and do you have it in you to go another round or another 2 or 3 rounds, because it will be relentless. And if you don't, then what is your option? Because the option for no one is it's not an option to do nothing, but we've got to work out what's the safest way to increase your probability of success when all bets are off. And no one can, I appreciate that some of us have worse hands dealt to us than others. I understand that, but it doesn't matter what your hand is. Your job is to be tactical and to play your hand the best you possibly can play. And if you can't do that yourself because you're not seeing the wood from the trees, then you would engage someone like me or my team to help you. And it needn't be me, but I do know that when it comes to outcomes, we can run a business. Financial literacy is quite funny, because financial literacy is, you know what to do and you remember what to do, but financial literacy doesn't translate to executing what you should do. In fact, it only accounts for 3% of financial success. So I don't care if you know what you need to do. I want to understand, what do we need to unpack so you can do it successfully? And that's normally a change of environment or extra support in your environment. But if I can say one other thing, Peter, is that Kiwis in business, we are one of the most agile business operators in the world. So if any nation can pivot in this, it's us. But we are also particularly useless when it comes to cash management. So we need to take those two together and build on them together. Because being agile without understanding your cash position is going to create stress, which leads to a lot of other things.
So look, there's masses of good advice in there, Hannah. I think it was, take control of your own destiny. Think about yourself first. You can do all the empathetic, compassionate stuff you want in the wider community, but in terms of your own business, make sure you're in control of your own position before even your own business's position. Be agile, focus on cash flow, plan, and be open to pivoting whichever way you can. So I think, look, that's been fantastic talking to you, Hannah. I really appreciate the advice you've given our members, and it's been an absolute pleasure to talk to you today. So on that note, I'll let you get back to your afternoon on day 9 of the lockdown, and we'll say goodbye there.
Thank you.
Ka kite anō.